The bull market continues its rally this week. What happens next? That's coming up on 3 Minutes on Markets and Money. I want to look at the markets a little bit differently today. Normally we look at a daily chart of the S&P 500. We talk about kind of where we are in terms of the market trading environment on a short-term basis. I'd like to step that back just a little bit and look at a weekly chart because of some interesting things that are currently happening on that longer-term time frame. And again, as we're looking forward, what we're trying to figure out here is how much room does this market have to operate in the short term as we're investing capital. And the weeklies can tell us a little bit about the intermediate term because it strips out some of that day-to-day volatility that we're getting. Right now we have a very strong rally going on in the markets, of course. That's not surprising. It's hard to believe, but we've been rallying now for about 10 weeks, going back here to the lows that we set earlier this year in late May. The markets rallied off of that. And again, kind of these rally stampedes that we get in the markets where the markets kind of incessantly seem to just go higher, they don't have an unlimited life to them. We've had about 10 weeks of advance in the market so far. Markets are very overbought here on a short-term basis. And if we kind of go back and look at previous periods where we have these kind of unadulterated advances in the markets that kind of go on seemingly nonstop, there's always corrections along the way that come back and retest support in the markets. And again, that support right now runs along about the 50-week moving average, which has always kind of been a good test spot for markets to pull back to. So a correction right now back to about 4,000 on the S&P would not be surprising, and that would actually provide a very decent entry point to add some exposure to your portfolio if this is indeed a trending bull market. So, kind of going back here, here's that March 2020 decline, and coming right off that low, we had a very similar rally in the markets that got above the moving averages and came back down, retested those moving averages, and then began to rally again, continued to kind of retest this moving average support line through each rally. So your best buying opportunities, again, that's that buy the dip mentality, is that when you get these dips back to support, that's a good time to be entering into your equity exposure. Now there's a difference. Through the entirety of this rally in 2020, 2021, Fed interest rates were at 0%. They were doing $120 billion a month in QE. Now they're actually reducing their balance sheet and hiking rates. So it's interesting that we're getting the same type of rally and kind of that same similar stock market behavior that we had previously. This is that hindsight bias. Everybody looking back going, well, that's the way it worked before. That's the way it should work now. We have to remember, though, this is a different environment. So just be careful here. The weekly suggests that we're back into a bull market. Some of the technical indicators also telling us the same. But again, market's very overbought. Use pullbacks to add exposure carefully here. And remember that the Fed is tightening their balance sheet and reducing liquidity, not increasing it. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. We'll see you tomorrow.